Traders, welcome back to another price action trading lesson. The structure in front of us is resembling a trading range. Flat EMA, consistent price swings up and down. Overshoot of the trend channel line is generating reversal and a brand new downtrend has been established. And we have slight overshoot as well. Now overshoot can lead to break of a trend line or reversal. As you can see, the correction right now in the market is happening. However, even though we have overshoot, I still expect new extreme to be tested for this downtrend because this downtrend is quite strong. You can see steep, strong bearish leg working lower. So what I have to do if I want to sell, I still need to respect the correction, and you can see the correction clearly resembles a visual one leg. The short-term uptrend is still in play. We have a new low, first entry short, second entry short. Of course I cannot sell because the uptrend is in play. We're not fully at the EMA. Now this would be called a double trap because all the early sellers selling the second entry short got trapped, and all the early bulls buying a failed second entry short below EMA under wrong context, they're going to get trapped as well. However, as you can see, the uptrend is still in play. There is no clear close outside attempt to get a new extreme. So when I see this, I still need to be careful. So what I'm thinking about, I want to see bearish confirmation. I want to see the lower high confirming this pattern because we still should get the new extreme. Okay, price action is trending lower, and you can see we already created significant push down, and by the time I get lower high, I cannot take it because the move down already happened. You can see we almost formed basically double bottom, very close to getting a new extreme, far from the EMA, but more importantly, this is a significant leg down because you want to catch the lower high here. You want to be part of this move, not to chase it when the move is already happening. Now we have first entry short, second entry short. Can I take it? No, because same issue applies because this push down was so strong. We already created the double bottom. It's too late. There can be stronger pullback now. This uptrend can get a second leg, so don't get trapped here. Remember, you want to catch this move before this move is going to happen. Now that you already created the big leg down to double bottom, you have to be careful. Market is reversing, and right now what I have to do, because I can see EMA rejecting, I have to redraw a brand new uptrend. So I'm going to connect the first few swings, I'm going to copy it and put it at the top. It aligns with the EMA and it aligns with the overall trading structure. For the EMA, consistent price swings up and down. So you have break and extreme. We're closing outside of a channel. So what's going through my mind as a price action trader? Well, I expect new high to be tested following the trend line rule. Every single time you have a channel on your chart present. And in trading ranges, remember this, you draw these channels tight because you expect quick pivot upon reaching the extremes. So every single time you have a channel, you expect new extreme to be tested. We're closing outside a channel, new high. First entry long, so what's going through my mind? I want to see second entry long at the EMA, a high probability setup. Now we have second entry long. This is very close to be okay setup. New high, first entry long, pullback, second entry long, because you have to think about this from the seller's perspective. Look at this big bearish bar. They sold, but the context is bullish. You're above EMA. Problem is, you don't have much room before you're going to scalp to reach these highs, and it didn't even trigger. Okay, you can see the signal bar didn't trigger, it stopped with an inside bar, and because you would be buying right into these highs, you have too many negatives, so it is better to skip this. Market created a break and the new extreme following the trend line rule. We're confirming the area at the top of the trading range, the resistance, so we can have reversal, and this is looking good for the reversal. Why? Because this is swift, bearish push below the EMA. This is why we have the EMA on the chart, supportive indicator. You can see how we slice through this, indicating possible bearish reversal in a trending structure. We have a lower high far from the EMA I cannot take, and now we have great setup. New low, first entry short pullback, second entry short, visual two-legged pullback, uptrend played out. And if I'm gonna count from the latest highest high, this is a first entry long pullback, second entry long failure. This is double high probability setup. We actually had it not too long ago. Double high probability setup, very common in trading ranges like this. Second entry short, also a failed second entry long, and this is first great high probability setup for today. Now, as you can see, it didn't trigger. One takeaway from triggering, I was about to take this setup. Now, very similar to this, notice a lot of times you can consider taking the setup even if there is no trigger if the follow-up bar forms with the direction of the previous bar, and in both examples you can see it actually worked pretty well because take a look at this bar. It's very bearish and almost breaking the previous bar. The same thing right here. The signal bar right here, the second one, is bullish pin bar as well. So you can see the momentum is there. Same thing here, the momentum is here. So you can consider still entering this when there is no break below the initial bar, but the second bar is very close to triggering and still pushing the momentum. But if you're a beginner trader, you're better off generally just to skip it. If there is no break, if there is no trigger, that means you need to cancel the order until you get more experience. But when you see the second bar having such a great momentum like this or like this, there can be a case for still entering. We have a break and a new extreme, so it's a double hyperbolic setup. Now you have a break in new extreme, but you can see EMA keeps rejecting. Of course, I cannot take second entry short from the EMA, and this is double trap. Now I remember, because we had a similar structure not too long ago, in trailing range a few days ago, every single time we had a two-legged pullback like this and EMA kept rejecting, there was actually a bit wider downtrend. But this is way more nuanced and way more experienced. Fortunately, if you've been trading the last few days, you kind of understand what to anticipate. You know, this is tempting because double trap basically acts as a lower high. But, you know, you have an initial break in your extreme, way more aggressive. I'm going to mark a little bit more aggressive. You know, it was tempting to take it because there's a big chance the channel is just slightly wider. Why? Because we're bouncing off to range highs. So we should go somewhere around the bottom. So it makes sense that the bearish trend is going to be a little bit wider. For this reason, we're contemplating the possibility of wider downtrend because we're bouncing off the range highs. We could have considered lower high. You can see that actually would have been great. This would clear a lot of things up, but it is a pure doji. Had there been no doji, much better bar, you can actually consider this because it's basically confirming this double trap and would have been actually a decent setup. Now break at a new extreme even for this wider channel, so I don't think we can take any setup here. Even though EMA keeps rejecting, I don't think we can take anything. Now price action push lower. Now when I'm watching this and I can see nice geometry, I was actually looking for some spike in a channel like this because you can see how well it really fits off of these highs, and there's a big chance we're going to reach the low today. However, I cannot take new low first entry short, second entry short. Why can't I take it? It's simple. I have a short-term uptrend being in play. Even though it worked for a scalp, I still gotta be careful. I cannot take lower high, of course, because it is horrible inside bar. It is wedgy. This uptrend can get a new high, but we don't take inside bars like this, especially after such a bullish spike up. And as you can see, market completely reversing. Okay, we are indeed in a trailing range. Market quickly reversed, quickly pivoted. So I'm gonna adapt. I'm not gonna argue with the market. I have to trade the market I get, not the market I want. And you can see also geometric formation over these lows, allowing you to predict possible wider uptrend. But this is what is happening in trailing ranges many times. Market will just pivot, and no stronger trends have a chance to live long because in trailing ranges, market will pivot up and down fairly quickly. I'm just going to zoom back and remind you the structure. You can see this is clearly a healthy trailing range, consistent price swings up and down. So you don't argue with the market, you just have to adapt. And right now, you're playing this short-term uptrend. Okay, we're closing outside. So what I'm thinking about, same thing as I was thinking right here. Okay, simple price action following the price action rules. This is how markets work. I want to see two-legged pullback because we need to get new high to test this bullish channel. Okay, this is how price action works. You just need to train your eyes to see it, and you need to get the screen time to trust it. But there is no second entry long. By the time I get a second entry long, I cannot go along above bearish bar below EMA. Okay, since we broke below EMA, that is not what you want to see, because this means that the buyers are not ready to jump in yet. You can test the new low of this downtrend. So if I want to go long, I need to see push above EMA. New low was created, which is good. You can see this wick broke the latest lowest low. One leg break, second leg down. So downtrend played out. Okay. Now we have high low. And even though I said you don't want to go long below EMA, that's because here we didn't truly get the new low tested. Now we have the new low. Break, new extreme to like a pullback. But it is below EMA, so it is way more aggressive. But chances are truly high that we're gonna test the new high. So I want to see push above EMA, and I want to see a felt second entry short, a trap. And why it is going to be a trap, and now we have it. New low, first entry short, pullback, second entry short failure. It's gonna be a trap because if you take a look from the bearish perspective, notice how juicy this second entry short looks. A lot of sellers shorted here, not paying attention that market moves in pairs of twos and a downtrend correction already played out, and this uptrend was the stronger pattern and needs to get to new high. The bigger pattern takes precedence. So first entry short, tick lower, second entry short failure. So this is a great high probability setup. Felt second entry short. I used a engulfing entry here because we trigger over, reverse all the way up, and once this single bar is so big and you can see the shift in momentum and they're getting stopped out. On failures, you can use engulfing entries, which means you're going to wait for this bar to get a break above its high, stops being triggered, and then I use the limit order before this bar even broke higher. It is more advanced, so you don't really want to be focusing on this as a developing trader. But when you have a failure, which are failed second entries, you can consider engulfings, because especially in this case, the bar was so big, it was breaking higher really quickly, the momentum was there, you're going to get the new high. It makes sense. But you can, of course, wait for trigger and enter even after trigger. A new high was tested following the perfect market trendline rule. So right now, what does it mean? You can expect reversal or correction, and you don't really want to be holding runners too much. I took my runner off of these highs, 4 points, because we have a break in new high and we are in a trend range, so we can pivot lower. So just to make sure you're not really, following the wishful thinking, hoping for big runner. You are trading a very healthy trend range, so this is not a strong trending day. Your runner will probably not be that strong. So you have to really read the structure that you're getting. And now you have a second entry long. Can you take a second entry long? Of course not. Break, new extreme, uptrend played out. So this means there can be a potential reversal, and we have a second entry long, new high, first entry long, pullback, second entry long failure. So this right here is a failed second entry long. And today is a great lesson on traps. Here you can see how great the trap looked for sellers. And here, picture this. It looks very nice to like a pullback for the bulls. But the reason why this is trap is because the context is not supporting this trade. The context says that this uptrend already has a break and a new high. It played out. So this is going to be a trap because the smart bulls, they bought lower, they took their profit, and market can reverse following the trend range rules. And you cannot be drawing wider channels in trend ranges. You already know this. So this is a great failed second entry long reversal pattern because all these bulls, they got trapped. Great signal bar, and this is perfect reversal pattern. Okay, market keeps trending lower, and because this is such a significant push, I'm going to redraw my downtrend a little bit wider, something like this. However, once again, we have overshoot, massive bearish spike far from the EMA. We're bouncing off the low day support, and this is why it is important for you to understand where these important key levels are, because you can predict where their orders are and when the buyers and sellers will step into the market. We have another failed second entry short. Now, normally I'm not too much of a fan buying when the downtrend is still in play, but because this overshoot was so substantial, you can see complete 90-degree spike down far from the EMA. You have the important key level, so more advanced trader can consider buying here, because this second entry short is so far from the EMA. After overshoot, you expect stronger pullback, so it definitely makes sense to be buying at the support far from the EMA, riding the overshoot further back up. Now, because we have overshoot, I'm going to draw the channel up a little bit wider. I cannot go long because this downtrend can get a new extreme. I can only go long once we retrace over the 50-60%, because here the downtrend can still get a new extreme. At the same time, I cannot sell because this trend has been established. Overshoot is quite strong, so I have to respect it. The market broke lower. I don't think we can sell right into these lows, and now we have break and move to a new extreme, even though this looks like a substantial move down, and your common sense will be telling you, okay, there's a bigger pattern established. If I'm going to zoom back, we were trading a very healthy trend range the entire day, so chances are very high that we're most likely going to go back into the trend range again. For this reason, I'm really not focusing on broader channels like this. I'm going to be observing the EMA though, because of course anything can happen. But if we're going to break through the EMA, there's a big chance a brand new reversal started. And you can see EMA is indeed in favor of the bulls. Now, we have spike, and we can see small consolidation. It allows us to predict possible spike and a channel pattern, something like this. You can see it fits really well. EMA keeps holding, and because we have brought 2 legs down, there was just stronger bearish pressure. I'm still expecting more price sessions going back into this trend range. We have a second entry long. Problem is, this second entry long is not fully at the EMA. You can see the body is quite far up, but it aligns with the trend line, it aligns with the EMA. Decent enough entry. Had it been closer to the EMA, would have been green hypolotic setup. Market keeps working higher, and basically the spike and channel is getting confirmed. We keep working higher, but we still are above EMA, so there's a chance the channel is just a little bit slightly adjusted like this. You can see still fits perfectly, aligns with the EMA, and now we have, this was where the 2-legged pullback happened. Significant event, 2-legged pullback, new low, first entry short pullback, second entry short failure. A little more advanced way how to count this, but the failed second entry short aspect is there. Great signal bar, 2 key entry points, the EMA and the trend line. And look at it go, only first entry long here. We have a little bit of overshoot, but at this point we can adapt to broader channel, and market is about to close. Today was a very nice trend day, very predictable, perfect trend line rule. Even though trend range is not easy for developing traders to trade, you can see it is extremely predictable. Breaking new high, reversal, breaking new low, reversal, breaking new high, reversal. It's happening every single time. So make sure you're gonna see those established channels, and you can look for 2-legged pullbacks even inside of the trend range when you're expecting the new extreme. And once the new extreme forms, you expect the reversal. So I hope you had a good trading day. I'm gonna wrap it up, and I'm gonna talk to you next time. Good luck with your trading.